This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. 5 years ago, deep in a bear market, a group of traditional finance experts founded BitGet, and they've been building ever since. Now, with 20 million users worldwide, BitGet is committed to helping users trade smarter by providing a secure one-stop crypto investment solution with copy trading, future trading, and spot trading. Your security is their priority, and BitGet has one of the largest protection funds in the industry with US $300 million to cover potential trader losses from unforeseen events that are not due to misconduct from the user or platform. BitGet wants to inspire everyone to embrace Web3, so if you're new to crypto, learn more at the BitGet Academy with free blockchain courses, crypto guides, cryptocurrency trading strategies, and more. Or for the experienced investor, trade smarter with daily access to institutional-grade crypto market intelligence and trends analysis with BitGet Research. I've put links to BitGet Research and the BitGet Academy in the show notes, so get amongst it or simply go to bitget.com. Thank you to BitGet, and now it is on with the show. My guest today is James McDowall. James is a founding partner at Arcanum Capital. Welcome to the show, James.
Hi, Andy. Thanks very much for having me on.
It is a pleasure, James. Look, let's do what we do at the very beginning of the show. It'd be great to learn a little bit about your personal and professional backstory. What have you been doing in the lead up to becoming a founding partner at Arcanum Capital and, well, getting involved in investing in the wonderful world of Web3?
Yeah, so it's not your typical backstory of a fund manager. I actually come from a pro sports background. I guess growing up and coming out of school, I found golf, and that was all I really wanted to do. So I would spend the evenings playing a lot of golf, and it came to sort of, time to go to university, and all I wanted to do was play golf. That was my first love, and I was really passionate about golf. And so that's what I did. I took a couple of years out, and I was playing and practicing every day. And I wanted to be a golf pro. So I turned pro at the age of 19. And that was back in the UK. And I worked at a couple of different golf courses, had a full coaching diary, and was playing quite a bit in professional tournaments and things. And then an opportunity came up. I was doing well back in the UK, but there was another British pro out in Switzerland, and we were sort of in touch. And he one day said that he needed someone else to go and work over in Switzerland. I'd just come out of a relationship, and it seemed like very good timing. I wanted to broaden my horizons, and so I went over to Switzerland. I made the decision very quickly. And that's when everything changed, really. So I was working out there. I was coaching very interesting clients. Quickly managed to get some very, very interesting clients, very high profile. I managed to pick up Switzerland's biggest pop star, I would say. Does a lot of sort of Euro pop and massive stadiums, big tours. So I coached him and his son, and they were spending a lot of time with me. And there was also a couple of other very high profile clients. So I very quickly felt like I'd sort of maxed out. I was coaching these amazing people, but still wanted to broaden my horizons. And I was making decent money, but I really wanted to know what to do with it, right? I didn't want to just spend it on rubbish that I didn't need. And I didn't feel comfortable with it just sat in the bank. And I realized pretty quickly that I didn't want to play and coach golf for the rest of my life. So I started to look into investing. I realized that I read some great books like Rich Dad, Poor Dad, and realized that I needed to learn how to make my money work for me. And so I started to do a ton of reading and research. I spent a couple of years just reading tons, like on my downtime, and getting my head around finance. And so I took the plunge. Stocks and bonds didn't really interest me too much. They seemed a bit too mainstream, and like there wasn't really much value there. So I looked into alternative investments, and that's when I came across crypto. So this was probably 2017. Came across Bitcoin and Ethereum. I think Bitcoin was maybe about $1,800, and Ethereum was down in the low hundreds, I think. And it was, it seemed like there was a lot of value there because not everyone was talking about it. It was before the big 2017 sort of hype cycle. And so that's when I took the plunge into those. And then there are some cool tools like CoinMarketCap and CoinGecko, and as your appetite for risk increases, as you get familiar with the space, you sort of go down the market caps and start to look at more niche, lower market cap projects. And so I started to invest in some of those and even like help some of them. And so that's what I was doing. And then I met my now partners. We'd invested together in various projects, and we were helping them along the way. I spent a couple of years traveling around the world, building a network, meeting amazing investors and entrepreneurs to learn from, and that was a great inspiration. And so by the time it got to the year 2020, I'd made and lost a lot of money along the way, but learned a hell of a lot and built a really, really strong network within the space. And I decided with my now partners to launch Arcanum Capital. There was also another period where I studied with Kaya, the Chartered Alternative Investment Association or Analyst Association. And I also worked with an asset manager in Zurich in Switzerland once I got out of golf to really get some proper institutional experience. So that was all before I launched Arcanum. Learned about portfolio management and risk management and all those things at an institutional level before I was ready to launch Arcanum.
Fantastic. So well articulated, James. And yeah, I mean, that's fascinating. I love the story of, you obviously being a very talented golfer, and look, I guess thinking that you'd have a long career as a pro golfer and going into, I guess, high-end coaching, which a lot of pro golfers do, certainly. But then being smart enough and savvy enough, I suppose, to identify still at a very young age that, well, there's more to life than golf. And if you want to set yourself up for success, the best thing to do is learn to make your money work for you. And if you can do that at a young age, that is half the battle won. So, you've done well there. Funny that you should mention Rich Dad, Poor Dad, because, I'm sure a lot of listeners will have read that. I certainly read it when I was a bit younger, and I was just looking at the Wikipedia entry for it. It says it came out in 1997, of course, written by Robert Kiyosaki, who famously,
That's right.
He's a Bitcoin advocate these days, as well as I think precious metals. And look, I don't want to dwell on this too much, but of course the summary of the book is, the rich dad kind of invests, right, and the poor dad doesn't invest. But so that I thought that was interesting. I suppose we should.
It was like so the poor dad was his real dad, right? Like his biological dad.
Yes.
And Robert grew up with lots of sort of poor wealth programming, like work and spend and work and spend. But then it was his friend's dad who became like his second dad and his mentor and taught him all about like, yes, work hard, sales job, do well, but then buy assets that are going to pay you a residual income.
Correct. And look, funnily enough, as much as you've done a much better job of me at kind of nutshelling the book there, but weirdly, the Wikipedia entry for the book there's some criticism of it. Maybe they're just trying to be balanced and provide some pushback. There's some skepticism whether the two dads actually existed the way he wrote it. But that's not the point. If you want to write a successful self-help book, you've got to create these characters, don't you?
Yeah. No, that it's message over the messenger, I guess, and the exact reality. But the message is good.
Yeah, couldn't agree more. All right, so Arcanum Capital then. So, I guess you've identified some of the origin story for how you guys got together. So maybe just be great, James, just to hear your, I guess, overarching thesis for your fund or your funds. I know you've got two funds, but I guess, the Arcanum Capital as a whole, what's your kind of big thesis for crypto, and why is it an exciting place to deploy capital?
Yeah, okay. So one of the cool things about our group, Arcanum, it was founded that there were four founding partners. So myself, obviously in Europe, in Switzerland, Lu Chang, who she's from China. She's from Beijing, but she also studied in the States. And so she spends her time between sort of the Bay Area, San Francisco, and China. So that's quite a unique, prospect. And then we've got Rahul, who studied with Lu Chang. They actually both went to Draper University. So there's another sort of crypto connection there, because Draper University is like a university for entrepreneurship, run by Tim Draper.
Yes.
So he's a big Bitcoin advocate, and he's one of our sort of advisors and one of our LPs in Fund One. Luckily enough, Draper University Ventures subscribed to the fund. So Raul spends his time, most of the time, in India. So that's where he lives, sort of between Hyderabad and Bangalore. And then Karthik is his school friend, who resides in New York in America, but is from India originally. And so it's a really cool global team. We've got eyes and ears all around the world, from Europe to China to America to India. And that was one of our key differentiators, especially at that time, deep access to India and the Indian blockchain ecosystem. So back when we launched Arcanum, we kind of touched and worked with a lot of the top projects coming out of India, such as Persistence and Polygon. Sandeep from Polygon is one of our advisors as well, and one of our LPs in Fund One. And so that made up a bit of the thesis for Fund One, in that we did see a lot of alpha opportunity in India. So we were looking globally, but when we went out and sold the fund to investors, India was definitely a part of that thesis. The timing was good, the market was very hot, and we had some high net worth individuals who had made a lot of money in crypto and then wanted to diversify back into like the venture side and lock it up for a few years. And then we got some money from China as well. The asset manager in Switzerland that I worked with backed us as well. So we managed to raise $12 million in total from 44. Sorry, it wasn't 44. It was 44 portfolio companies that we invested in. I'd say a dozen, perhaps up to between a dozen and 20 LPs, investors in the fund, and then 44 portfolio companies, which were from all over the world, really.
Yeah, and so that was Fund One, the Arcanum Emerging Technologies Fund. And look, I do want to get to your second fund, because that's the kind of the news of the moment, which is called the Luganodes Fund. But just I think the India angle is fascinating, and I did have in my notes that you were very bullish on I guess companies coming out of India, and I'm sure you're familiar with the thinking and the writing of Balaji Srinivasan.
Absolutely, yeah. We co-invested with him at least once, yeah.
Well, there you go, because Balaji, of course, he's Indian himself, but he's extremely bullish on India. So maybe just, you don't need to go too deep into it, but love to just get a minute of your thoughts on, why the likes of yourself and Balaji see India as such a big growth market and, innovation, emerging technologies, and Web3.
Yeah. Well, certainly back then. Still, it's still strong now. But it was the connections we had. It was the population growth. It was the sort of, we had this thesis around this sort of renaissance in India in terms of education. Really, really smart kids going through university and coming out, learning to be blockchain developers. And we weren't seeing that as much in the West. But India really, was really vibrant. And then the Polygon ecosystem with Sandeep and everything. That was, Sandeep is from India and lots of Indian projects in there. And so, yeah, it was just great timing for India. The deal flow, the strength of the deal flow from India did drop off a little bit towards the end of the deployment of the fund. That was towards the end of the last bull market. And so it was a bit saturated and the quality dropped. Like the quantity goes up, but the quality drops, right? As everyone jumps on the bandwagon and everyone seems to be doing like an NFT or a DeFi project. And it's like, okay, we're getting a bit bubbly here. So we dropped off the India thesis a bit towards the end, but we've got some cracking Indian founders in the Fund One portfolio. Just that spring to mind, we've got Arcana. It's funny because their name sounds like ours, but it's coincidental. But Mayo and the team have done a fantastic job there. We've also got Abby from PlayZap. PlayZap we seeded, and it actually became the #1 game on Binance chain, on BNB chain, which was really cool to say that we sort of seeded that. And then CapEx as well. That's another one, a fantastic team there. The founder CEO is Hitesh, and we maintained a relationship with him from his days at Persistence. We also backed P-Stake, another persistence ecosystem project. That's led by Tushar, who's another fantastic Indian founder, and an ex-VC actually. He's worked at a fund. So lots of great founders there, and I'm sure we'll stick with them and support what they do for years to come.
Fantastic. Thank you, James. So that was Fund One. Then, if you like, the Arcanum Emerging Technologies Fund. So let's move to Fund Two, James, which is called the Arcanum Luganodes Fund, which is very interesting indeed. So, however you want to start, what is the thesis? What is the difference between Fund One and Fund Two? And of course, we better start to learn what Luganodes is as well.
Yeah, absolutely. So Fund One was our first fund. We knew that we needed to be quite niche and have a key differentiator there, right? Because institutional investors generally don't back first-time managers, right? If someone comes to you and say, "Will you invest in my fund?" and you say, "Well, have you ever done this before?" and you say no, they're probably going to say no. But we did manage to raise it with the Indian angle, one of our key differentiators is that we're very, very hands-on. So all 4 partners have worked with projects and incubated and helped from start to finish, really. So helping with introducing maybe developers, introducing validators for the network. We've got a fantastic network of those. Helping them with branding and marketing, with partners like John at Philcom, for example. And so we really are active investors. And that was one of the things that really helped raise that fund. So going on to Fund Two, we know that we're no longer first-time managers, but we still have to bolster that value add element to differentiate ourselves from all the other VCs. There are a lot of VCs in crypto. A lot of them have big names and don't necessarily add a lot of value. But if you see them on the cap table, you want to be in, right? And they might not add a lot of value on the micro level, but they do when it comes to exchanges and the big things like that. So one of the ways that we wanted to add value is get better on the technical side. So rather than just business development and marketing, the technical support. We already had really strong relationships with validators, But introducing Luganodes. Luganodes is the world's fastest growing staking services provider. So blockchain infrastructure provider. They're running validator nodes on over 34 networks now. And they have over $1 billion staked with them across all these networks. They're very, very big on Polygon and Tron. And well, like I say, there's 34. You can go on the website and check them out. But partnering with these guys not only will allow us to add value on the technical side, but also they have a fantastic network of other investors that will really supplement ours. So things like deal flow will become even better. Although we had fantastic deal flow before, Luganodes get access to a lot of the really sort of closely syndicated deals that no one hears about until they're raised, right? Like all the top investors get access. Luganodes found themselves getting access to all these deals. It's like, as being one of the top validators, they get asked to participate in test nets and things. And so with that, they often get offered the chance to invest at an early stage as well. So Fund 1 was more early stage, small checks into like decentralized applications, whereas Fund 2, we will be still doing the same as that, but we'll also be going bigger checks into layer 1s and layer 2s, with the added value of being partners with Luganodes.
Yeah, got it. Thank you. James, look, I was just looking, I saw that Luganodes, based in Switzerland, I think, Swiss operated, and is born out of the Lugano, which is a city in Switzerland, the Lugano Plan B Program, an initiative driven by Tether and the City of Lugano.
Yeah, that's right. So Bitfinex and Tether have offices in Lugano. Lugano is a very, very crypto-friendly city in Switzerland. The Plan B initiative is basically a drive to get all of the citizens of the city using crypto, so using Bitcoin, using Tether, paying for the day-to-day lives in crypto, and really modernizing, because Switzerland has a bit of a reputation of being old-fashioned in some cities, most cities, I would say. It's very nice and traditional over there. But some say that, parts of it lack innovation. And so Lugano have really, really embraced crypto. And if you go over there, it's fantastic. You can pay for your lunch at most of the restaurants in crypto. They have all of the sort of point of sale technology installed. You can just, whack out your Bitcoin wallet, or you can pay in Tether over Polygon. It's fantastic. So yeah, Luganodes came out of that initiative, really.
Yeah, fantastic to see. I mean, when I think of Switzerland, I think of Rolex. I guess I think of that Swiss-made precision. But it's great to see there's a lot of little hot spots all over the world that are a little bit like that. There's Estonia, there's what's happening in El Salvador, obviously. Lugano. It's great to see little kind of experimental crypto hubs springing up all over the world. And of course, Balaji would talk about the emergence of nation states as well. It's just trying different ways of doing things and working out how we can bring humans together to innovate and govern each other, but perhaps and of course conduct finance, but perhaps in a new way, which crypto and blockchains entail. James.
Yeah, that's right. And people might be asking, well, why would Luganodes do that? Why do they want people paying in crypto? I think the answer to that is you've got we've had a big shift with technology, right? It's taken away from small business. So, now you've got things like Amazon, for example. It's a bad example because Amazon aren't in Switzerland. But what I'm trying to say is these big businesses have really displaced the small businesses and the local economies. And I think Lugano was probably feeling the effect of that shift maybe over the past decade. And they want to really encourage crypto there as a way to attract talent right? So attract entrepreneurs to the city. That there's been a lot of entrepreneurs set up in Lugano. The government is friendly towards digital assets and digital asset based startups. And so ultimately the jurisdictions that are crypto friendly will attract a lot of the talent and a lot of the innovation. And that's got to be good for these local economies, right? And we're seeing the same in El Salvador, like you said.
Yeah, absolutely correct. So what's the status of Fund 2, James? Is that closed?
No, not yet. So Fund 2 has just launched. There was an article in Forbes yesterday, if you search that. So we're in the process at the moment of going out to our existing Fund 1 LPs, investors, giving them the opportunity to invest. And then going out to the broader market, institutional investors, accredited investors. It's not a fund for retail investors. There are quite a lot of rules around that, so it's not for retail investors. We don't have that sort of exemption from the regulators, but it's for institutional investors and accredited investors.
Got it. So if anyone is an institutional or accredited investor and they're interested in taking a look, what's the best process for them to do that, James?
Yeah, so the process there really is just to contact us by email, really. We don't go out and solicit investors. We also, avoid doing that in certain jurisdictions like the US because of the rules and regulations.
Yes.
But if we can do a process called reverse solicitation, right? So if you would like to learn more about the fund, then you can request, the deck, for example, and more information about the fund. You can just do that at info@arcanum.capital. And if you want to learn more, we'll be happy to send you out the information.
Fantastic. And that Forbes article you mentioned, so yeah, I read that earlier this morning. Very interesting. It's a good piece with a lot of detail and color on you guys, Arcanum Capital and the two funds. I think I read in that Fund 2 is going to be tokenized, James.
Yeah, that's right. So we're always trying to innovate and keep up with market trends. One of the huge themes of this cycle, let's say going up to the halvening and the next sort of bull run in crypto, is real world assets, also known as RWA, the abbreviation, right? So what is RWA and real world assets? Well, basically that's bridging the gap between traditional investments, like let's say treasuries or bonds, stocks, and even alternative investments like venture capital funds. There are other things like collectibles, maybe watches and cars. We've got a couple of portfolio companies in Fund 1 that are doing that with the collectibles. But real world assets will be a really big theme. And so we're tokenizing Fund 2, and that will allow investors to basically buy and sell a position in the fund on a secondary market, like on a token exchange. And the cool thing about the way we're doing it is that all of the regulatory limitations, let's say, like if you're an accredited investor, then you're allowed to buy in. All of that will be baked into the smart contracts. And so you once you buy or sell that position, you can actually transfer it on chain. So it's not just a token that represents the economics in the fund. It is literally your shares in the fund are, the token, and you can buy and sell that on the secondary market. So that's really innovative, because typically venture capital funds, you're locked up. You put the money in and you could sell your position, but it's very cumbersome, and this allows for instant settlement of the money transfer. on selling your position. So it just gives that extra comfort of the potential liquidity there for the investors, despite it being venture capital, which is typically illiquid.
Yeah, absolutely. I like it. I like it a lot. All right. Well, look, James, as we start to finish up this part of the podcast, anything else you'd like to say or share on Fund 2 or indeed Arcanum Capital and what you guys are up to, what's coming up, what's on the horizon? And again, just, please feel free to share the website and social handles, etc. as well.
Yeah, sure. Any entrepreneurs listening to this, we always love to hear from entrepreneurs who have startups in the space. So please get in touch. Again, you can email info@arcanum.capital. And the website, if you want to keep an eye on what we're doing, is arcanum.capital, the same domain as the email address. That's arcanum.capital. And another way to keep an eye on us and what we're doing is on X, formerly known as Twitter. So that will be x.com/Arcanum Capital. We currently don't write a lot on there, but we do repost a lot of portfolio highlights. So every time a company in our portfolio has some news or a release or a launch, we'll be retweeting that, reposting that. So yeah, that's a good way to keep an eye on our portfolio and us and what we're doing as well.
Awesome. So I reckon what we'll do next, James, is we'll go to a break, and then after the break, we'll finish off by running you through the very famous crypto conversation hot take round. But maybe just before we do that, I'd love to just get your very high level thoughts, just quick bullet points as to what you're thinking in terms of, I suppose, the year ahead, the next 18 months. You did sort of allude to the upcoming Bitcoin halving. Bitcoin, look, little jump up today. We're at 45,500 US for Bitcoin today. A lot of maybe fresh new capital coming into Bitcoin via those spot ETFs. It's only February, halving is April. It's starting to feel exciting, James.
Yeah, definitely. I like what I'm seeing in the market. The macro is not too favorable. If interest rates have gone up a lot, there is a slight rumbling of them potentially lowering interest rates towards the summer, but they don't seem too confident with that yet. But in the nature of fiat and fractional reserve banking, they will continue to print money, I expect. And so yes, the Bitcoin halving as well is upcoming. That's not long now. I think it's about 80 days. And for the last 3 cycles, we have seen an all-time high in Bitcoin. Usually I was looking at this just the other day, and I think it's within about 500 days of each halvening event, you get a new all-time high. Typically, I mean, we don't know what's going to happen this time, but all we can do is look back and say, is it going to happen again? My money is on yes, probably. And this market is very cyclical. When I was getting into finance and reading and researching, I was learning about markets and trading. And I think the emotions in the space right now are also very, very typical of what we see going into a bull run. So I think there's a lot of disbelief still. If everyone knows a bull run's coming, right, then everyone's usually already in. Okay, financial markets are a zero-sum game, and so you need that sentiment of disbelief at the beginning. So I do think there are a lot of people and institutions on the sidelines wondering if crypto is going to come back. And I think the guys that have been through, maybe 2 or 3 cycles know that it is, or think that it is. And so they've taken their positions. And I think ultimately, I'm bullish. So, we're raising this fund. We are going to be deploying capital soon. I wish we'd raised this fund already, because now in my opinion, not financial advice, is a decent time to deploy capital, especially, a fund like ours. So let's hope innovation continues and we see some great startups come out, and Bitcoin keeps doing its thing. Places like Lugano and El Salvador continue to do what they're doing, and things are looking up.
Yeah, great points. Well articulated again. Thank you, James. All right, I reckon we go to that break, and then, as I say, we'll come back, we'll finish off, we'll have some fun. We'll run you through the very famous crypto conversation, hot take round. Back in 1 second.
Hey, what are you still doing up?
I've just spent my entire Friday night researching Bitcoin charts, crypto glossaries. My brain feels like it's going to explode.
Why don't you just use BitGet? It's going to save you at least 10,000 hours trying to learn it yourself. It's an online crypto exchange. You can copy successful real-life traders having their expertise to make smarter trades.
Really?
Yes, really. Don't miss out. Get on it now. And by the time you're done, Bitcoin will be worth about $100,000.
I just got my cat to help me do the research.
Hands off, gains up. Start copy trading on BitGet.
All right, we are back, and I'm with James McDowall. James, of course, founding partner at Arcanum Capital, deploying capital to, help build out the rails of Web3, layer 1s, layer 2s, you name it, India, all around the world. James, I like to finish each podcast with a quick round of rapid fire crypto conversation hot takes. Are you up for it?
Yeah, let's go.
Let's go, James. Just going to run some questions at you. Just want, kind of honest answers, hot take style. Say whatever you want. Just a bit of fun. Question 1 for you. Where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
Oh, great question. I am not a Bitcoin maximalist. Am I a Bitcoiner? Yes. I believe in all the virtues of Bitcoin. But I don't believe in Bitcoin maximalism, because I think that is too narrow. And if we look at all the innovation on all the other chains, I do believe in a multi-chain future. I believe in interoperability, and I believe that the competition between the different ecosystems is very healthy. And I think that's the best thing for innovation. So where am I on the spectrum? I would say in the middle.
I like it. A pragmatist. Sometimes that's the best way to be. Get exposure to all sides, and I think that's a sensible approach. What would you say then, James, is your firmest conviction crypto opinion?
My firmest conviction crypto opinion. I believe in the decentralization of power, and I believe that crypto helps achieve that. There's an old quote, power corrupts and absolute power corrupts absolutely. And I believe we're seeing a lot of hyper-centralization in the world. And I believe that crypto solves a lot of that and ultimately frees a lot of humanity.
Oh, I just got goosebumps, James. You sound like Batman. Fantastically said. Bill Gates famously said, James, we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So 10 years is a long time, certainly a long time in crypto. Anything you like, Web3, blockchain, DeFi, Bitcoin, any of your funds, maybe you'd be onto Fund 5 in 10 years' time. But, what does it all look like in 10 years' time?
I don't know whether it's because the pace of change is increasing, but I think that a hell of a lot can happen in 2 years. And 10 years is too far out to look. I mean, we definitely see ourselves as long-term investors. And so, when we invest in things, we're looking 3-4 years ahead. But things are changing very, very fast. So yeah, that's a tough one.
It is tough, and that's why I think Bitcoin is, forget about the rest of crypto for a second, because, as you kind of explained at the beginning, the further you get on the risk curve, the less you can predict what's going to happen. But at least with Bitcoin, there'll only ever be 21 million coins. There's more people trying to chase after those coins every week. 10 years down the line, who knows what society will look like, what kind of AI tools we'll be wearing, what kind of VR headsets we won't even need to strap to our face anymore. The world will be a very different place, but there'll still only be 21 million Bitcoin. And I think that's a powerful idea to hold on to. But you're exactly right, James. Very difficult to predict what the world will look like in 10 years' time, because the pace of the technology is accelerating exponentially.
That's right.
All right. Well, another way of looking at this, of course, James, is one of my favorite quotes. It's from sci-fi author William Gibson. He, of course, said that the future is already here. It's just not evenly distributed. Can you think of an example of the future being here right now, but most people aren't aware of it?
Yeah, I think the answer's staring us in the face, and I think it's crypto. I look around and we're at that point where no one's talking about it. You ask people about Bitcoin and they say, oh, that was cool like 4 years ago. I haven't heard much about it. Is it still alive? And I think everyone in the industry knows that crypto is the future. And that's not just on the monetary level. This is the entire shape of the internet, right? So when we talk about our fund and our investments, we don't really talk about crypto. We talk about Web3, right? So this is everything. This is how we transact with each other online. This is if we own our own data or not, rather than these sort of oligarchs owning the data on everyone. So the future is here. It's staring us in the face. It's blockchain and Web3, and it has the power to disrupt just about every industry. But not only that, probably the two biggest industries or technologies, and that is, finance and the internet.
Very well said. And it brings us nicely to the final question, James, which is, what is your favorite science fiction book, film, or TV show?
Oh, The Matrix.
Oh, very nice. Very nice. Are we living in a simulation?
I think The Matrix is a metaphor.
Yep.
And I think a lot of the guys that get into crypto, I think it can help people escape the matrix a little bit. That metaphorical matrix. And like I say, I think it has the power to free a lot of people. You can take from that what you will. Yeah,
absolutely. Fantastically said. All right. Hey, we reached the end of the show, James, and it's been a great one. I've really enjoyed talking to you. Thank you so much for spending some time with us and telling us all about what you guys are doing at Arcanum Capital. Again, just to finish off, please do share the website, social handles, and look, any parting thoughts, please go for gold.
Yeah, sure. So a reminder of the website, it's arcanum.capital. On there, we've got current portfolio, we've got news. There's a bit about us, the partners, advisors, directors, and things. Best social to follow is x.com/Arcanum Capital. And on there, you'll find reposts of portfolio highlights and be able to keep up with everything that we're doing.
Awesome. Thank you so much, James. All the best, and bye for now.
Thanks very much, Andy. Great to be with you.
All right, there you go. Hey, that was a fun one. That was James from Arcanum Capital. Deploying funds, deploying capital, and lifting the veil that is the matrix. I think James is exactly right. The great thing about the matrix is you can indeed read the matrix as a metaphor for many different things, but that is indeed one of them. The matrix is, crypto kind of lifting the veil on some of the the falsehoods of the current financial paradigm that everyone is trapped in, and crypto as a breaker of barriers, breaking people out of the matrix. Great way of looking at it. Of course, also the matrix as just reality as a simulation theory. I love that as well. I think it just goes without saying, as you know, technology evolves exponentially and we create the ability to build simulations, then it goes without saying that any other advanced civilizations will have built millions, perhaps billions of simulations. So we could be in one of them. I think there's an idea in probability theory that it's more likely we are in one of those simulations. Just scary to think about, but I enjoy it. All right, we reached the end of another show. Thank you, team. Please make sure you are subscribed to the Crypto Conversation in whatever podcast app you are using. But that is it for today. Thanks, team. This was the Crypto Conversation for Brave New Coin.